Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader on XAUUSD. In this video, I'll be analyzing the chart of gold USD for Monday. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So after this fall, we saw some kind of recovery on the chart of gold, and the last traded price of gold is 1846. So overall we can see that there has been some sort of recovery. If you have watched my previous video on gold, then we were expecting an up move on the chart of gold because gold was constantly forming lower lows in the market. Gold was unable to cross the previous highs, but when gold bounced from this particular level, I clearly pointed out that gold this time did not break the previous low. Rather, gold formed a lower high in the market, sorry, higher low in the market. And we also had a symmetrical triangle kind of a pattern, and as it was squeezing, okay, I told you that we could expect some kind of a breakout, and as per our expectation, we saw a good up move on the chart of gold. Okay, and what are the reasons? The first reason is the softening of the DXY. As we all know that DXY has been flying for the last couple of weeks and months, but right now there has been a correction going on in the chart of DXY, and the reason is the struggling GDP. Yes, there may be a recession coming up, so as a result the air is negative. Okay, the vibe is negative for DXY US dollar because of the upcoming recession. Okay, the next GDP results will be very important for all over the world. So as a result, things are not much positive. Okay, so DXY is under correction. And if we look at the chart of 10-year bonds also, okay, the 10-year bonds is also telling us the same story. So as a result, we saw some kind of a recovery on the chart of gold. But the experts are still of the opinion that overall gold is bearish. Okay, there may be some kind of a recovery on temporary basis, but overall they think that the chart is still bearish. But my dear friends, we are not investors, we are retail traders. We usually target for 30, 40, 50, 100 pips, isn't it? We mainly prefer to take trades for day trading purpose only. So as a result, let's try to find out what are the important levels for us on the chart of gold for Monday. So this is the 4 hours chart of gold USD in front of us. Okay, so first of all, I would like to point out that we have seen strong price rejection around 1832 level. Okay, around 1832 level, we have a strong price rejection. And if I take you to the 1 hour chart, and if I take the help of Fibonacci retracement level, then I can see that apart from 1832, we have 1834 as the Fibonacci 38.2% retracement level. Okay, so as a result, if market falls also, okay, we can expect that 1832 to 1834 will act as a support in the market. If there is no event in the market, if there is no heavy fall in the market, under normal circumstances, we can expect the market to bounce from 1832 to 1834. Okay, we also have Fibonacci retracement level around 1840 also, which is the 23.6% retracement level. But to be honest, I will not suggest you to take a buy position on 1840 if you're a beginner or new trader. But if you have been trading for quite some time, if you know how to manage the risk, then you can go for a buy position around 1830 if market bounces. But in comparison to 1840, 1832 to 1834 seems to be a much more reliable level, not only because of Fibonacci 38.2% retracement level, but also we have a good price rejection around this level. So as of now for Monday, I'll suggest you that yes, 1832 to 1834 can be a support for the market if market bounces. After all, confirmation is always important for any trader. So If market starts falling and market bounces from 1830 to 34 level, observe the market. If you see the market is forming hammer kind of a pattern, good price rejection from below, you can definitely go for a buy position. Okay. And on the other hand, if market starts going up after the market opening, and the possibility is also quite high if we consider the present condition of the market, if we consider the tension in the global market regarding the upcoming GDP data of US, or if you analyze the 10-year bond chart. So overall, there is a possibility that after the market opening, we may see some upside on the chart of gold as well. So if market starts going up after the market opening, okay, what you can do is you can take a buy position. Okay, you can take a buy position above 1850. Above 1850, you can take a buy position, but keep in mind that Monday mornings, okay, usually on Monday mornings, we do not see much volatility in the market because of less participation of the traders. But in case there is a good volatility in the market, in case you see the market is forming big green candles, there is a power of the bulls. अगर bulls अगर काफी pressure में होते हैं, मतलब power दिखाते हैं, in that case you can go for a buy position above 1850 as well. Okay, so 1850 will be an important level. If market crosses 1850, you can go for a buy. If market reverses, do not sell, because taking a sell position in this market scenario, okay, is quite risky. Okay, you do not need to trade here and there everywhere. A trader only trades when the opportunity is right. Okay, so if market crosses 1850 and the buying pressure, the buying power seems good enough, you can go for a buy position. And what will be your target? Your target should be around 1858. So around 70 to 80 pips target you can hit. So if market breaks with good buying power, the level of 1850, your next level will be 1858. Okay, and the next big resistance for the chart of gold, okay, next big resistance on the chart of gold is around 1864 to 1866. Around this level you can expect the market to face some serious selling pressure. Why? Because if we take the help of Fibonacci retracement level, okay, you can see that around this we have around 1864-66 level, we have Fibonacci 38.2% retracement level, plus we have also witnessed price rejection around this level. So as a result 1864-66 will be a resistance for Monday. No need to trade here, but in case market breaks this level, you can go for a buy and you should exit by 1858. Okay, this is your exit level, 1858, and your entry will be around 1850, 1851. But keep in mind, you need to observe the market. The size of the candle should be good enough. It means that the price should have the support of volume, because if price does not have the support of volume, there can be a false breakout as well. False breakout is a bitter reality of the market. False breakout is a bitter reality of the market, and the only way to save yourself from false breakout is to look for volume. Okay, and if you do not have the knowledge of volume much right now, then it's better to look at the size of candles only. That is the only way. Okay, and in case market starts falling, I have already mentioned, you can look for 1832 to 1834 as support. 1840 is also there, but not at all reliable. Okay, so these are the levels for Monday. Hopefully you've understood. So if you've liked the video and found the video informative, give a thumbs up. Bye bye, take care.